Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, 13th day of December 2017, and this is the Daily Report for Gold and Silver. Following the release of today's FOMC Fed statement, we saw gold pop and pop sharply to the upside, along with silver both doing very well. Gold trading up $16.40, closing at $12.5810. Silver trading over $16 an ounce for the first time in a while, $16.09. The effective close, a 42-cent rise, about a 2.5% gain, and that all in light of a strongly lower U.S. dollar, trading off almost 0.7%, down 68 points at 93.40. Now, in terms of equities themselves, we did have a new all-time record close in the Dow, a gain of about 80 points, closing at 24,585. Fractionally lower in the Standard & Poor's, 2662, with the NASDAQ trading up about 15 points at 6877. Finally, Bitcoin trading under pressure. Futures markets actually trading off by about $1,000 today at $17,020, and that's only $500 away from cash current pricing. Gold pricing exhibited a tremendous pop to the upside, along with silver, immediately following today's release of the last FOMC statement of 2017. Interestingly enough, the Fed stayed the course, and the highly anticipated interest rate hike was in fact revealed, as well as the monetary policy model for 2018, in which they laid out a total of 3 rate hikes next year, which was also widely anticipated. However, whether it was a massive short covering or bargain hunting rally, a combination of the both, we saw gold prices pop strongly to the upside, currently trading up $16.10 at $12.5780. The first thing that we can derive from today's market move and yesterday's intraday low, which came in precisely at a 78% retracement of the major rally that occurred from July to September, this upside pop, our question is, we certainly have a one-day key reversal here, but will that continue? In other words, does this signal the conclusion of this long and dramatic price decrease that occurred over multiple months? Of course, on that note, the jury is certainly still in deliberation, because one day does not make a market reversal. We absolutely would need to see strong and confirmed follow-through to the V pattern that we're witnessing in the market today. To that end, I see resistance currently at the 61.8% retracement level. That comes in at around 1264. And when we look at this particular price point, we can note at least 2 occasions in which the market went to and found this area as a supportive area. Support and resistance are part and parcel of the same thing. One man's floor is another man's ceiling. I would certainly like to see gold prices on a closing basis not only breach the 1264 or 61.8% retracement level, but the 200-day moving average, because if gold is able to have the pivot that we saw today and take out these 2 price points, that would give us solid technical confirmation that a bottom was in place and we were in line for the year-end rally that typically has been prevalent in gold since 2014. In other words, if the market is able to trade and close above these 2 price points, there is probably a whole lot of upside still available in any rally that would be building steam starting at this point and at these lows right here. However, if we see a failure to take out this price point, either at the 61.8% retracement level, or if we have resistance at the 200-day moving average, then we can view this V as a small bounce prior to it returning to the downside pressure that we have seen so prevalent in the market since September of this year. Today's news also sent the dollar reeling to the downside, currently trading off by about 0.7%, 93.41, and trading under extreme pressure, down about 66 points. We had two basic levels of resistance that we were looking at, with the first level coming in just above 94 based upon this top here, and a major level of resistance at 95. We certainly saw the market find real superlative resistance and trade lower from that price point, breaking back below its 50-day moving average. And so the question is, just as we are pondering in gold, is this a key reversal or simply a one-day wonder or a short-term bounce in the market? As far as U.S. equities are concerned, we had a positive reaction. S&P 500 did close fractionally lower today, off about 1.25 points, closing at 2662. However, when we look at the composite, we can see that that tracked higher, closing up 14 points, as well as the Dow Jones Industrial Average, which did quite well, closing at an all-time record high, up 80 points at 24,585. It is quite obvious that between the news of a tax reform, which is going to get pushed through, as well as today's Fed statement, were perceived as bullish for U.S. equities, and the risk-on environment as far as equities are concerned continues. And traders, finally, take a quick look at Bitcoin futures as they trade on the CBOE. That market did close lower, off $950, closing at $17,070 per Bitcoin. We compare that to cash price of Bitcoin, which according to Coinbase is currently sitting at $16,845, which is down $675 from yesterday. In other words, a 3.85% decline. And I believe what we are witnessing is the cash market and futures markets coming into a realistic alignment as those prices come closer and closer together. Traders, while it's true that there was no fundamental change in the marketplace today, and in fact, the statement by the Fed and the announcement of an interest rate hike matched expectations, we saw the precious metals markets take off wildly to the upside with the dollar under pressure. It's an interesting move that we saw in the market, and that's why on today's show we talked about the critical levels of resistance a couple of dollars above current gold pricing that really need to be taken out before we get technical confirmation that we got a key reversal, and the lows reached yesterday at 1238 were in fact the bottom of the correction. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.